My view is, if everybody in the world today universally agrees we have an inflation problem, the question you got to ask yourself is, if the Fed raises short-term rates to 1% or 2%, and they've agreed there's a 7% CPI, and if you can establish a 15 to 20% monetary inflation rate, what's the likelihood that inflation's going away?
I'm not looking to play like where's Bitcoin going price-wise, but I want to mention something because I think it's interesting. I don't think it's coincidental that the recent decline in Bitcoin has come on the heels of a Fed that's seemingly trying to get themselves back from being, in my words, reckless to having some semblance of order. With that said, to what you're saying, if they were to have to backtrack for whatever reason, market collapse, or they just can't continue raising rates and reducing their balance sheet, how bullish would that acknowledgement that they have effectively failed be for Bitcoin?
I'm not a trader, and so my short time horizon is 4 years, during which 5 years will I'll take that kind of risk, and my normal time horizon is a decade for a forecast, and the ideal time horizon is forever. It's property. Do I want to own Manhattan? Do I want to own London? Do I want to own gold, or do I want to own Bitcoin for the next 30 years, right? Having said all that, right, the way Bitcoin trades oftentimes is it trades like with the derivative, the acceleration or the jerk or something of the money supply. So the fast money traders control it in the near term. They will tend to kind of do the opposite of the long term, which I find interesting. When the Fed said there was no inflation, right, people come on television and say, there's no inflation, maybe you don't need Bitcoin because Bitcoin's an inflation hedge. And then the fast money trades against it for a bit. And then another week or 2 weeks go by, and then once you get outside the fast money, the momentum, the more fundamental players come in and they start buying it up, and it accelerates. And I think when the Fed says, well, I guess there is inflation, we've got big inflation, but we recognize it's a problem, the fast money says, oh, well, they recognize it's a problem, so it trades against Bitcoin. Like, well, the Fed's going to treat the problem. And you're in that dynamic. And then I think eventually over time, the longer term investors come in and they start to drive it the other direction. My view is, if everybody in the world today universally agrees we have an inflation problem, the question you got to ask yourself is, if the Fed raises short-term rates to 1% or 2%, and they've agreed there's a 7% CPI, and if you can establish a 15 to 20% monetary inflation rate, what's the likelihood that inflation's going away? We're going to stay in an environment for the next 4 to 8 years where we're going to run higher deficits. We're going to have a lower interest rates, looser monetary policy than we had before 2020. There's just a question of, are you a 15%er or a 20%er or a 12%er? But I don't think anybody reasonably can expect that we're going to go back to a tighter money policy than we had in 2019 or 2018. So my forecast there is all the strong currencies of the world, which are the dollar, the euro, and then all the currencies pegged to the dollar, the DRAM, etc. All of those currencies lose 15% of their purchasing power a year for quite a while. The second tier currencies are losing double that. They're losing 30% of their purchasing power a year, and they're just weakening against the dollar, and you can see it. And then the third tier currencies are losing anywhere 50% to 100%. Well, they're running 50 to 100% inflation. You can see that in Argentina right now. And the indicia of the weakest currencies is either nominal inflation is diverging from the black market inflation. Like the official exchange rate of the peso is like 100 peso to the dollar, but the blue market rate hit 210 pesos to the dollar the other day. And I remember when it was 1 peso to the dollar. So the weakest currencies are going to have capital controls. We see the Chinese currency, the CNY is pegged to the dollar, but the only way they peg it to the dollar is with capital controls. And the appeal of Bitcoin is it's just a savings account in cyberspace run by software. It's like Bitcoin is like a savings account run by software, and it's incorruptible. The software doesn't get to change the rules. You're not guessing whether they'll hit their quarterly earnings. You're just putting your money in that bank in cyberspace, and you're waiting for a decade. And over the course of a decade, after you smooth out all the volatility, it's outperforming the S&P. There's no CEO to give himself stock options. There's no board to issue credit or debt and dilute you. You don't have to worry about your stock triples and the company sells more stock. All you're doing is you're converting what is a weaker form of property into a stronger form of property and waiting for a long period of time.
You mentioned talking heads. I mean, unfortunately, I find myself one of those talking heads. With that said, we say things on the network, a lot of the networks, when we talk about Bitcoin, we call it cryptocurrency. Bitcoin is a currency, and I'm sure that makes you wince in pain because you have a much different view. You view this as property, and that's not nuance. That's an actual distinction.
I think that if you're going to be in the entire crypto economy, you have to understand the legal and the technical definition of property versus security versus currency. A currency is a legal tender, and you can legally transfer it 1,000 times a year without incurring a tax obligation. I can take $1 million on 6 months ago, hold it for 6 months, give it to you, and there's no accounting event, and there's no tax event. Property, I take $1 million of property, if it trades, and I give you $1 million of that property, but the basis has changed, and of course it's going to change, there's a capital gain or a capital loss that has to be accounted for. And so if something's property, you're not going to want to trade it. You're going to want to hold property for a decade. Maybe the ideal holding period for property is forever. Once you figure that out, if 98% of the people disagree with you, it's probably a good investment. Like, I could have lined up everybody on Wall Street in 2010. You can go back and you probably had a parade of people, talking heads on television, telling you why Amazon didn't make money, they're never going to make money, blah, blah, blah. And here we are today. So that was my experience, a happy experience. I knew find the dominant technology and put the chip down and wait a decade. I had my father's experience. My father worked for his entire life and retired as a Chief Master Sergeant in the Air Force. And then his retirement savings He can't invest in a savings account. They yield 0. So he goes and he buys some stocks, and he bought like British Petroleum stock. And, so my dad's owning British Petroleum. They have an oil well blow up, and then the President of the United States decides to enter into the fray. The stock gets destroyed, and it's like, why does a non-commissioned officer have to become a stock analyst and bet their life savings on guessing which stock will get destroyed or not get destroyed? And it struck me as, that's not right, right? The political system destroyed the savings account. It used to be you could buy a bond yielding 6% interest, and the risk was the United States government would default on it. And we got to the point where, a guy driving a taxi cab has to guess whether or not Facebook will beat Apple, and you're taking risk. And so my view was, there's something wrong. People shouldn't have to be hedge funds, and they shouldn't have to guess whether a stock will beat their quarterly earnings in order to not lose all their money. There's something busted there. Now, that's not the worst case. The worst case is I'm sitting in Argentina or Turkey or Lebanon or Venezuela, and the inflation rate goes to 100% or 200% or 1,000%, and you're going to burn through all your cash in 12 months. And so you can see that risk-free rate varies depending on the macroeconomic circumstances. And if you're going to run a business responsibly to preserve shareholder value, you got to have an opinion about what is the real yield on your treasury strategy, and how important is it to have capital. And if I'd given all the capital back and just dividended it all back to the shareholders, then we're a low-growth company generating cash that's losing 15% of its purchasing power a year, competing against Microsoft.